I'm going to get started with your take on the index. Last time it was so close yet so far. Yesterday, perhaps taking us closer to those all-time high levels. It's expiry as well. What's the view?
So again, the view remains bullish bias on the index. So look at this way: the last 4 days, we've seen a 240-point correction on the Nifty. I think from 18,886, the high we made on the index 4 days back, towards 18,636.40, where we made a low on the spot on the Nifty. The markets have just taken just 1.5 or 2 days to try and make a comeback towards that 18,800 mark. Yesterday's closing was all the more stronger because we had so many large cap names seeing a round of short covering. In fact, the first thing which was very interesting about the markets yesterday was short covering in many of the large cap names, whether it's the likes of SBI, ICICI Bank, HDFC Bank, etc. Many of these stocks have start to show those signs. And going into an expiry, whenever you see such kind of signals, it actually augurs very well for these stocks starting off for the fresh series. And especially at a time when these stocks have been underperformers for good part of the previous series. So when you have such kind of strong signals, it indicates that the markets are looking out for a new trend. So I'm not just expecting a new high for the index, but possibly at the start of the July series, expecting a very strong uptrend coming back into the indices, and that range bound that range which we are trading on for the bank Nifty as well as for the Nifty, that I think should be broken for good.
That's the point, that yesterday's market rally in a sense was fueled by a large cap stock, and it led to a bout of short covering. FNO expiry, short covering, global cues suddenly are strong and supportive, and the dollar index has gone below 103. So if you're a bull, you would say that guess what, I've got everything on my side. FIs, big number, HDFC Bank has fired, bout of short covering, FNO expiry, followed by a holiday, and then Friday you take a fresh card. So Vaishali Parekh, do you think we are in for a new high today? Vaishali, do you think we are in for a new high today? Good morning first.
Good morning, very good morning to all of you. Yes, it looks very likely because yesterday's new round of momentum gave us once again a very strong up move. And today also the foreign markets, SGX Nifty indicates a strong start. So, well, I would be looking at 18,900 to start with for today.
18,900 and the resistance mark today could be taken out. So what happens next, Kunal? Are we looking at 19,000? Are we looking at a strong breakout? And forget 19,000, it may just take us closer to 20,000.
I think it's
time to think big.
We take it step by step. So after a 500-600 point up move and a 250 point consolidation, what we expect is that at least the Nifty would rally up to at least 400 to 500 points, which is mid part of this range, as well as the uptrend, the previous uptrend for the index. So we tend to benchmark in terms of a breakout that if 18,880 gets crossed over, then we could be looking at 19,200, which is approximately 400 point rally for the index. So I think we should be now calibrating the index move in a staggered manner, 400 points on the Nifty, possibly 1,000 point to 1,500 points move on the bank Nifty. So I think what matters over there is that which are the sectors which can probably lead or fuel the rally for the index. Like what we saw on Friday, we saw on Monday, we saw the auto index making a very strong comeback. Then yesterday the auto index was more or less subdued, but then you have the bank Nifty which made a very strong comeback. So if there are few more large cap sectors which make a strong comeback, like maybe metals, FMCG, etc., then I think it could propel as well as fuel the rally much more stronger, and we should easily cross over that 19,000 mark as well.